Hey everybody, welcome to Trading Capital's exclusive analysis. In today's video, we're going to be touching on natural gas and the oil market. Starting with natural gas. Natural gas saw a pretty big down day today, closing down 4.6%. Now you are hitting some decent technical support, but being the fact that you weren't able to really make that much more of a higher high in this trend, although you did, it was a very weak higher high. So what does that mean? Well, since it was a weaker higher high, and being the fact that you had this huge rally a few days ago, and it's almost given up all of that, it leads me to think at the minimum, you're going to be testing this low pivot and likely even a little bit lower. I think nat gas, couple reasons, could retrace back to this high pivot zone here. So you could even fall as a little bit lower till you hit this double pivot and this double pivot over here. It would do a full round retrace back to this original breakout zone, and it would also likely coincide with the center point of this beautiful parallel channel. So this has been the channel that we've been chopping in, making a high to a low to a high to another high to a low. And it would not surprise me if we retrace right back to the center point, which is this dotted blue line. So definitely keep this beautiful symmetrical channel on your charts for the natural gas. Now, natural gas does have a tendency to have big moves in both directions. Long term, I do think nat gas is going a little bit higher, but I do not hold a position. I exited my long somewhere up here with my members around that 350 level. And I do think that there is a chance that we go to 439, but I do think we have to see a little bit more of a sell-off and pullback. Even if you look at some of the natural gas stocks, look at these AR stocks. I mean, briefly making a little bit of a higher high, but really never getting that true confirmed breakout on the daily chart of the higher high. And if natural gas stocks go all the way back down to the low end of the channel with a weak market and a weak underlying commodity, that would kind of align with where we expect natural gas to go. Thursday's a big day for natural gas because it is the natural gas storage update. The last 2 weeks you have seen a less than expected build, which is underlyingly bullish for the overall commodity, but definitely pay attention because sometimes this price action doesn't really follow the fundamentals. It's news driven, headline driven, and it could also be technically driven. I think at this point in time, we're more technically driven than anything to retrace back to the original breakdown zone around this $3.06 level. That's just for curiosity. I haven't actually done this, but if we throw a fib retrace from this low point up to the high, look at that. So the fib retrace would put you right at that center point of the channel. 382 fib retrace takes you to 305. Pivot, pivot, 382 retrace, impulse green candle breakout. That would be a pretty important area in the sand for the natural gas price. And if you were to lose that, it's really the low end of the channel, or actually the 618 retrace at 267. If we got down to 267 again, I would be backing up the chart. Let's look at oil quickly since we're on the energy market. Oil, this looks a little bit too easy on the bearish side. Why? Because look, you have this head and shoulders that has triggered on the daily, but you haven't really confirmed. Now, any close back above this neckline and you negate this head and shoulders. But why is this looking a little bit too easy? Well, perhaps it's piling a lot of people in on the short side, and perhaps the head and shoulders isn't quite ready to break down. I do think that eventually it is likely we retrace back down to this downsloping trend line. But this bearish consolidation right underneath the neckline almost leads me to think that there's going to be some sort of news announcement or pop that forces oil to have a quick snapback all the way back up to this 84 level. So in theory, as long as we don't take out these lows, let's say oil does have a quick snapback to 84.50, you would still have a potential inverse head and shoulders just with a little bit of a bigger drop to take place. So again, right now, this pattern is technically valid because you've triggered the neckline, this upsloping neckline. The downside target of here takes you right down to about 72.84 in the charts, give or take a couple dollars. But it does showing more downside in oil, which is going to be good for the consumer, good for the inflation side. And it makes sense if the dollar's hitting support and likely to continue to see a little bit more momentum to the upside for oil to naturally break down. Even if you look at XLE, which is one of the weaker sectors, basically I have it priced in that XLE is looking a little bit choppy and sloppy. And I think that it needs to hit a big support range, which would put us right around this key trend line. I think this upsloping trend line around 81, 81.50 on the XLE is likely where you're going to retrace to in the next, say, week or two, just based off of how oil's trading. On that note, please give this video a big like down below. Definitely check out our website at tradingcapital.ca, where you can find some additional key insights through our membership model to see how we're trading the market. It's all about transparency and keeping your finger and pulse on these markets at all times, because things are certainly wild on a day-to-day basis. Take care, everybody. We'll see you on the charts a bit later.